Good afternoon, dear ladies and gentlemen. Welcome to Storent Holding webinar. In today's webinar, we'll cover three parts. The first part will address company's past, present, and future operations. It will be presented by Andris Pavlovs, co-founder of Storent Holding, and by Onkele, Chief Financial Officer. The second part will focus on the current bond offering, its terms and conditions. It will be presented by myself, Jānis Dubrovskis. And the third part is questions and answers, where you are welcome to send in your questions. So far, we have received 2 questions, but you are welcome to send more during the webinar. Now I give floor to Baiva, please.
Good afternoon. Welcome those who are online and also those who are watching later in the recorded webinar. So Storent is construction in an industrial equipment rental company. We operate in the market more than 15 years. We are based in Latvia, Riga, and have expanded to 5 countries, 3 Baltic countries and Sweden and Finland. Currently, we have a public bond offering, which will be valid until next Monday, 18th of March. And proceeds of the bonds will be used for general corporate purpose, also investment in our equipment and possible acquisition. We are equipment rental experts. Of course, our main asset are our people who has very wide knowledge of equipment, but our services are possible to order also online. So nowadays, construction buildings are getting higher and more complex. So without equipment rental, it's very hard to build any building. So we are offering very wide range of equipment, starting earth moving equipment, access equipment, electricity with our generators, also safety and fencing, also scaffolding and different kind of small tools. So rental is the sustainable way how to provide construction projects with equipment. Storent Group's unaudited numbers of last year showed almost 44 million sales, 14 million EBITDA, and nearly 5 million earning before tax. We had growth in the Baltic countries, but Nordic countries has shown a decline in the market, so sales were smaller in there. So our EBITDA margin is very stable during last year. It's over 30%. The biggest part of our assets are, of course, fixed assets. And last year we did some changes in evaluation methods. So we switched to the fair value of assets. We hired third party who evaluated our assets, and now the assets contain 91% of our total balance value. Our equity is also in very high level, 66%. Part of this is asset revaluation reserves, but we also did equity increase up to 33.5 million euros. So coming back to our market share, we have 11% of Baltic market share. We are leaders in digitalization and online. 95% of our sales deals are signed digitally. So we have excellent team of experts, 236 team members, and we operate with the rental fleet and the worth of 160 million euros. We are 100% Latvian capital company and very proud of that. Now I give a word to our co-founder and chairman of the board, Andris Pavlovs, and he will tell about history, how we started and where we're heading.
Hello, everybody. I think everybody can see me. Yes, I would like to tell a little bit about myself. my partner, and a little bit about the history. I would like also to ask you to send the questions, because we are presenting already company. It's already third time we have the webinar. We had also some presentations last week in Estonia and also in Latvia. Probably you can see these presentations on the Investor Club webpage. Yes, to make more interesting this webinar, it's very important these questions sessions. It could be very nice if we will get questions, and we will be happy to answer these questions. Yes, about myself. Yes, I born in Latvia. I'm from very small city in Pļaviņas. I graduated by Latvian University. I've got bachelor degree from Latvian University, and I have EMBA degree from Riga Business Schools. I think this was one of the most right decision in my life to go to this school, because in this school actually I understood that I can build also business myself, and it's everything is possible. And of course also we met with Eri in university, and we started in Riga Business School together, and from that time we are the best friends. At the beginning, I established the company together with my partner Andris Bisnieks, but in 2022 he left the company, and in 2022 we decided to merge Storent Group with Selectia Group. Owners of Selectia Group was Eriesta. And from that time we are the partners. But going back a little bit, when we start our business, not a little bit, it's already 15 years. When we start our business, it was 2008. We established company, and in April and already in September, as you remember, we had very big and terrible crisis. But at that point of time, we understood this as crisis. Usually from that point of time, I'm thinking that crisis always it's some opportunities. You can afraid of it, you can decrease the business, you can, let's say, think about how to save something. But from my understanding, this is the best time when you have to think how to develop company and what to change in a company, and maybe what to do differently, not as we did before. And also this has helped us to implement a lot of new ideas. It's a split rent, re-rent. We are actually still re-renting and split renting equipment which do not belong Storent, but third parties, and it's still pretty big amount. If I remember correctly, at the moment it's between 20 to 40 million, depends on season. Is it high or low season? And from the first day of the company, we also understood that we need to focusing on IT, on digitalizations, on technologies. And actually we implemented first online shop already in 2010, when nobody actually in the world had something like this. Yes, still 2021 and also before COVID, people didn't use it a lot because of a lot of things. And one of the things, this was authorizations of users. When I saw first time Smart ID, I understood this is actually changing point when we can go very quick with this online ordering of equipment. But later I will tell you a little bit more. In 2009 we opened in Estonia. In 2010 we opened. We already were third biggest players on a Baltic market. And initially we had investors, Jon Heidi Gudmundsson, he's from Iceland. He invested 5 million on a greenfield. We invested with Andris Bisnieks 1,500,000 each. And we have been working with this structure till 2014. In 2014, Jon Heidi Gudmundsson left the company, exited, and we found new investors. It was a Darby private equity fund. At the beginning, we had wonderful cooperation with the Darby until 2017. As you see, we bought company in Finland. We bought Kramo operations together with the small operations in Russia, in Kaliningrad. It was like a package deal. Now we, as I promised, we sold just a couple of weeks ago, and we finally exited from the Russia market. We found some way how to do it because it is not so easy nowadays. And we developed company very fast, but in 2017, 2018, actually the strategy of Darby has changed significantly. Actually, the mother company of Darby decided to close this management company, equity management company, and that was for us a very difficult time because they didn't know what to do with us, and we cannot agree about the future development of the company. But finally, at the end of 2022, we found solutions. Darby exited. Andris Bisnieks, my first partner, left the company, and we, together with Eriesta, continue at the moment our operations. And now you can see actually what we did last webinar. I think we had on autumn 2023, and we promised to merge Selectia Group. Owners of Selectia Group was Eriesta with the Storent Group. Actually, we did it. Now there is only one group. This is the Storent Holding Group. And if somebody remember our structure we had between Storent Holding and operational company Storent Investments, we split this company, and Storent Investments with Russian operations have been sold. And on the Storent Holding, we just have operation in 5 countries, Latvia, Lithuania, Estonia, Finland, and Sweden. Clear structure. Clear understanding of owners, clear structure of the group of companies. We also increased our share capital to 33.5 million. Actually, everything what we have been promised had been promised in 2023. We did, and now very clear structure of business, very clear structure of owners. And as you see on this side, we have also very flat organizational chart. Actually, I am involving in day-to-day operation of the business areas a little bit less, but we have executive boards, Baiba and Guntis Greenbergs, and we have some general management team. Mainly these are people from Latvia, but some of them also from Lithuania, some of them also from Finland. And this general management team main responsibility to help the countries to make the business in every country. In every country we have country management, usually sales manager, regional manager, and as you see from this chart, a lot of people have been working in Storent for many years, and actually in rental industry. We have one of the, I think in Baltic countries we have best team in terms of knowledge of rental business. I'm personally also in rental business from 2001, already 22 years. Yes, time is running. Okay, Baiba will continue with some boring part, figures, but a very important part. And I would like also, I will continue with digitalization and online, but please also ask the questions to make our webinar more interesting for you. Thank you.
Okay, so I will try to excite you with the operations, Storent operations. The leader in between Storent countries, of course, is Latvia with 12 rental depots, and Latvia is generating 39% of Storent total income. From the Baltic state, next is the Lithuania with 23% and Estonia with 10%. Recently, we had very good addition to our Estonian sales team, and we strongly believe that the Estonian part will definitely grow. So in Baltic, we are operating a general rental company offering wide range of equipment. But in Nordic countries, we are specialized in special equipment. So in Finland, we have access equipment and truck-mounted cranes. We are operating in 3 rental depots, Helsinki, Tampere, and Oulu, which is up north. But Sweden is very small, the smallest part of Storent Group with 10 people and 1 rental depot in Stockholm. So market share in Latvia, we are the leaders with 22% of the market share. Estonia and Lithuania stable number 3 with 9% and 6%. In Nordic countries, taking in account the market value, we are very small. So Finland 1% and Sweden 0.1%. But there we can see more potential to grow in Nordic countries because market is very large and industries are also growing. So our equipment fleet. So we did last year the fleet evaluation. So fair value of our rental assets are 80.7 million. But if we would buy the same equipment new today, it would cost 138 million euros. So in recent years, due to the COVID and also the Ukrainian war, there has been quite big increase in equipment prices and new equipment prices, and that affected also the used equipment prices. So on average each year, 15 to 20% inflation increase in equipment prices. So on top of our equipment, we operate also the split rent equipment, third-party equipment. It's 16% of our fleet. So model works following. They deliver equipment to our rental depots. We rent it to end user, and we report about income and share the income. 70% receives equipment owner, and 30% goes to stays to Storent. So about product groups and main brands. So we like to use well-known brands because customers like them well. But recently our fleet has additions also from high-quality Chinese brands like LGMG, Access Lifts, and working platforms. Actually, this group, lifts and working platforms, is the largest part of our fleet. So 29% of total rental revenue comes from that part. Then the second largest product group is earth moving equipment. Right now, also very popular because of Rail Baltica project. Telescopic handlers, this is kind of new product in the market and getting more and more popular. In Sweden, we are specialists in telescopic handlers. Site units are needed for every construction object. This has always been very needed product. So truck-mounted cranes we rent in Finland. Then comes generators with 6%. We have very strong position in generators, and we can serve different kind of events and industries. Scaffolding, so we have very skilled engineers who can build very difficult projects, from the scaffoldings, renovations, also the roofs, temporary roofs. So, and then comes smaller groups. Yeah, that consists 24% of rental revenue. About construction market and equipment rental markets. So although a year ago there were big concerns about what will happen in the Baltic construction market, despite these negative thoughts in media, we estimated growth, and actually it happened. In Latvia last year it was 18% growth in construction volumes. Lithuania also the same number. Estonia, there was different situation. Yes, there was some decrease. But why we operate in this market and why we think that it's worth to invest money and continue business is that actually equipment part of a construction market will continue to grow because workforce is getting more expensive, and as I told in the beginning, the buildings are more complex, and more equipment will be used in construction industry to build the buildings. And that we see also from penetration rates. That means the percentage, how much of the total volume of construction is the rental. So we see that Nordic countries are much further than Baltic countries. So rental industry has future, and we strongly believe in, and the reality is showing the same. So our customer base, so we have very diversified customer base. So top 50 customers makes only 22% of our total revenue. Industries are very different. Of course, the main is construction, it's civil construction, road infrastructure works. Then comes also the manufacturing premises when they do maintenance or repairings, renovation projects, as mentioned already, with scaffolding, entertainment industry, fencing, and of course generators with electricity power. Also farming in the high season, and military industry as well. And here comes our part of digitalization and online, which differs us from other competitors. As Andres mentioned already in the beginning. Yes.
I'm here, yeah. Yes. As I said at the beginning, for our company and for our business, most important, I think, are people. This is actually our main competitive advantage. A lot of people, a lot of employees in our company working in rental business more than 10 years, some of them more than 20 years. With a lot of people, we are working together also some more than 10-20 years. Also with the Bible, for example, we are working together more than 20 years, from 2001. And this is very important. Second one, of course, we need equipment. We need equipment actually which customers want to rent, and actually which customers need. And sometimes we need, not sometimes, but in many cases, we are bringing some new equipment and actually some new technologies for construction companies, which they can use to be more efficient and to do much more in the same period of time. This is also one of the important part and important part of our competitive advantage. But the third one, how we are working actually, and here we are absolutely different than other rental company. I am, let's say, big fan of technologies. Sometimes I am saying I'm too lazy, and that's why I want that machines do instead of me a lot of things. And of course, this is very important nowadays. And actually, it's two different fields where we can use technology. First one, this is how we communicate with our customers. And as I said to you, in 2010, we already had online portal in which customers could log in and could get all informations, cooperation informations between Storent and their companies. They could get agreements, delivery notes, they could get balance of equipment which are they renting at the moment. They can make estimations of invoices. They actually all cooperations between Storent and our customers. And these portals have been used already for more than 10 years. And when we came with a new one portal, I think 3 years ago, it's already 2020. It's already had online possibility to rent equipment through the online. And we had also this before, but as I said at the beginning, we cannot authorize our customers. And for us, security, it's very important because we are renting equipment which could cost, I don't know, 100 euros and could cost, I don't know, 150,000 euros. Or some machines like big money to more than 200 euros. And for us, it's important to authorize the persons who is signing contract, delivery notes. In case of problems, we can, let's say, use these documents to go to the court and actually to bring equipment back if something going wrong. And we are very focusing on the security in these issues. And actually, from the beginning of Storent, I had ideas that all the processes should be made automatically. And actually today, I visited a lot of our depots and looking how our people working. And today it's happened like this. Our customers making online orders or coming to our branch or calling to our salespeople or customer service, but big part already coming through the online. It was last year around 50%. It's and our actually order coming and systems makes everything automatically. We are let's say checking availability of equipment automatically. We are checking the customers. We are giving these customers credit limit and credit ratings. Actually, our customer service immediately could order equipment through could order the transport truck for this equipment to deliver this equipment using a marketplace cargo point. We are connected to this marketplace. It's also, we are created this marketplace. It was our idea. And immediately, actually in 5 minutes, we are ready to deliver equipment. We need just go to outlet, take equipment, put on a truck, and that's it. And customers, which is very important, can stay any place. They can order everything through the online. They can sign all necessary documents automatically. They can sign delivery notes, staying in office or in home, it doesn't matter. A lot of time for equipment coming people who is not authorized to sign some documents from the company name, from the company, construction company. And usually they are coming to take the equipment, they are calling to the boss and saying, okay, I am ready to take equipment, please sign. And this is happening in a second, actually, not even in a minute, but in a second. And this is actually, I am not going according our slides, but in general, I would like to give you impressions how we are operating, what we are doing every day. And of course, for us, it's very important internal process automatization. This is about efficiency of our company. Actually, my target as owners of the company have as less as possible employees. And of course, these employees have to be very efficient. This is only a way how we can improve efficiency of our employees nowadays. This is only automatization and digitalization. Actually, we are working absolutely without any papers. We are not printing any papers or documents, and we are not transferring one information from one systems to another systems. Actually, all the processes, sales processes, customer service management, technical division processes, financial management, everything automatized. It's happened automatically. And now we are transferring all our systems. We are switching from this year 2024 to new ERP systems, new back office systems, intelligent rental management system, and it's a cloud base, and actually all our ERP systems will be cloud based, which helps us very quickly open any depots, open operation in any countries if we would like to do this. Actually, this is also how we are increasing our efficiency. We try to make all the process very efficiently. As I said, for example, about credit rating of the customers. Previously, debt controllers went to the different database, to the Lursov, checks the balances, the profit and loss statements, putting these figures manually to the systems. Now everything happens automatically. We are connecting a lot of database. We are getting these informations in online, and we can make any decisions also about the customers based on the figures. And in our operations, you have to understand the level of digitalization. We can get profit and loss statements, not for country, not for even, we can get for country, we can get for outlet, we can get for a specific group of equipment. We can get a profit and loss statement for specific drill or excavators. It's available in our systems, it's available in our BI tools which we are using. And this is very important to you to understand that all our decisions, it's not like, okay, we want to invest 20 million because we think everything will be okay, and we will buy, I don't know, some excavators or tractors, whatever, lifts. All our decisions made based on the data which we have, and on an analyzed which we are made ourselves. And we are, as last year, everybody, let's say, if I remember correctly, it was April, May, just before we issue the first bonds from this program, on all information from any sides coming that 2023 will be a very difficult year, especially in Latvia. But as Abaiba said, we had very good growth in Latvia, excellent growth, I would like to say. And we said at that time that Latvia and Lithuania will be very good markets for 2023. In Estonia, we expected also that it will be decrease. But if we are looking generally for Baltic markets, we had growth. And we use this growth mainly to be more profitable. We get 2 times more profit in 2023. Actually, We need this money to invest in our equipment. We want to bring 20 million of equipment additionally, and this is very important to develop the company. And you should understand that all our decisions made based on informations which we have for the 15 years. And we are using a lot of our data to make correct decisions where to go and what to do. And actually, we know what to do and when. Baiba will continue with the figures. Thank you.
Yes, so here's a slide with our financial statements. Of course, you are very welcome to go to our webpage, storentholding.com, and you can find more detailed information. But to save your time, what I want to emphasize that 78% of our revenue is rental revenue, but on top of that, we are also selling the services, transportation, assembling. And then, of course, there comes also some sales of the smaller tools and accessories. So Anders already told that we have plans to grow, and last year we invested 13 million equipment. This year we have plans for even a bigger amount to invest in equipment. Because the rental business is always the balancing between young and old equipment. Of course, all customers wants to rent new equipment. That's very nice. But if we look from the profitability side, of course, the bigger profit we can do on the older equipment. And yes, so our growth, how we see our growth, let's say ambitious but balanced growth, because of course we have responsibilities to bondholders, and we have to earn also money to pay quite high interest rate for the bonds. So we are really focusing on efficiency and on efficient investments and on the growth depending on the country where the market situation is better. And also like operations in 5 countries allows us to move the fleet and manage the utilizations through all these 5 countries. So again, coming back to the numbers, so in our bond prospectus, we have 2 financial covenants. It's net debt EBITDA, which is not higher than 2.5. Last year we had 2, and equity ratio, so not lower than 35, and we had 66. So balanced growth is also planned for the next year.
All right, here I will cover capital markets topic. Storent Holding has been on the Baltic capital markets already for 6 years now. Started in 2017 with the first issue that was a private placement, attracted more than 100 investors. And the bond was also listed on Nasdaq Baltic bond list, which is a regulated segment. Later, the bond was refinanced with a new one in 2020, and also partially repaid during COVID period. Last year, for the first time in its history, Storent Holding announced public offering of the new bond issue, and in 2 tranches raised 15 million euros from around 1,300 investors. Most of them are Baltic retail investors. All 3 previous bond issues were listed on Nasdaq and have been actually quite actively traded. So the current bond issue is a part of the base prospectus that was approved by Bank of Latvia last year. We encourage every investor to review a base prospectus, supplement number 1, and final terms of the issue. So in brief, current offering is in total of 7 million euros. Interest rate is 10% per year. It is paid out on quarterly basis. The bond matures in 2.5 years in September 2026. The covenants, 2 main covenants are net debt to EBITDA not higher than 2.5 and equity ratio not less than 35%. The subscription of for the new bond issue continues until next Monday, that is March 18th. The minimum investment is one bond, which is 100 euros. A little bit about the process of subscription. Investor needs to have a securities account at any major bank or brokerage company in the Baltics. Some banks have automated subscription process, some have manual. So depending on the bank, you can check it yourselves, how to submit the bonds to the order. But in essence, it should be rather straightforward. Your investor needs to indicate a number of bonds, and the bank will reserve the necessary amount. After the subscription, the issuer will announce the results, and on the 21st of March, the bonds will settle, meaning that the investors will receive bonds on their accounts, and the issuer will receive the funds. So that's in brief about the subscription process, but should you have more questions, please address them after the webinar. So with this, we finish the second part, and we switch to questions and answers section. So the first question was about the use of proceeds. Baiba, please, that's your question.
Yes, so as I mentioned in the very beginning, so there are three main sources where it will be assigned. So it's general use of company, the investments in the equipment. So we are financing in the banks, but on top of that, we have down payment, and some equipment units can't be financed in the banks. So this is in equipment investment program. And also we are still looking for M&A transaction for possible targets. We were looking in the Baltics and also Nordic countries. So constantly we have a few targets to negotiate with. So we hope to get into some deal which will allow us to grow in the sales and profit-wise also.
Yeah, I would like to probably add a little bit to clear understand the situations. We are going to invest this year 20 million euro in equipment. We already ordered almost all of these equipments. I think around 19 million it's already ordered and open only 1 million. And in a bank, we have down payment between 20 to 30%. It depends on the group. If it's in average 25, only 5 million we need to down payments to the banks to get financing, financial leasings from the banks. And of course, beginning of season, we are investing in equipment, drinking equipment, and the rest part, of course, we need to operate company at least couple of millions we need to have before the seasons, because of course in the season time we have higher sales and better results and better cash flow. In low season we have lower figures of our sales and incoming cash flow. Of course, this is very simple mathematics behind of our bond program. And actually we need to invest in equipment at the beginning, and only when we will bring equipment, actually in June, July, this equipment will start to work and we will get additional sales. But of course it's very important for us invest before the seasons. We made already order last year to get the equipment on time and to use this equipment already in this season, not let's say in the next season, when if it would come at the end of a year. Yes.
All right.
Do we have some more questions?
Yes, I will read another question. So what is the minimum amount of money to invest? So it is one bond, which equals 100 euros. Another question is about potential for further digitalization of services. Andres, perhaps you would like to answer?
What could you repeat, please?
Do you see any potential for further digitalization of services?
Yes, yes. This is, of course, this is very important questions, and we just that's why we are implementing new systems which will bring us additional, I think, which brings additional convenience to order something online for our customers. We have very great ideas, and probably at the end of May, beginning of June, we will implement these ideas on the market, and definitely nobody from our competitor could copy this or make something like we are doing, because in this field we are really number one. Not only in the Baltic market, I would like to say we are one of the best in the world in these questions, and we know how to improve our cooperations with the customers, how to make life of customers more easy, and at the same time to get more benefits from rental companies. We are working all the time on this process, and our target to have at least 50% orders from the online. And you have to also understand one thing: all our documents, agreements, delivery notes, everything, our customers, as I mentioned before, our customers are signing with a smart ID or e-signature. And today we have approximately 95% of our customers, 95% from all our documents are signed digitally. What does it mean? It means we are saving a lot of time when customers don't need to come to us. We don't have to go to the customer job site to sign some documents. And actually, it's just signing, but in real life, it saves a lot of time for a lot of people and improving efficiency, definitely not only for us, but also for our customers. And we are thinking also how to improve this efficiency, not only for us and also for our customers in the future. I think this is one of the critical point for future development. I think in any business, but in rental business also, it's a very critical and crucial point to develop the company. We have ideas how to use in the future also machine learning and artificial intelligence to make life easy for us, for making some decisions, and maybe also for customers. Actually, we have a lot of plans how to develop this industry. Actually, not only our rental company, but in general, how to develop this industry. I'm working also a lot for implementing new things, not only for Storent, but for rental industry in general. I have some ideas how this industry should work in the future, actually, and it's not like let's say a lot of company operating today. I have some visions where we are going with the Storent, but also I have visions how to change this industry in general.
Thank you, Andres. I'll read the next question. In the invitation to bond purchase, you have indicated that Storent Holding is to participate in the primary market. What would be the purpose of its participation of its own notes purchase? Would that mean that Storent Holding will give a privilege receiving right to buy before other investors buy? I might, I want to answer this question. Such right has been included already in the previous subscription processes. And the reason for that is that it is a public offering where participating banks have different ending times when the subscription process closes on the last day. And in the past, some investors could not properly subscribe for the bonds because the banks already closed the subscription process, and therefore we have included this right to buy by the issuer itself, so that in case someone misses the bank's deadline but not the official deadline, then there is the opportunity to participate by buying the bonds from Storent itself.
So yes, I want to add. So we are happy to offer the bonds in public, but not always the bank infrastructure is very easy and very convenient. So sometimes we need to find another ways how to actually serve our investors.
So, all right. The next.
We had questions about the Sweden. Yes, could you read and Finland development?
Yes. Do you plan development in and how in Sweden and Finland markets? Do you plan to get the new markets?
At the moment, we don't have any plans to go any new market. At the moment, we are focusing on the Baltic markets. We are investing mainly our target to bring new equipment on the Baltic market and get additional sales in Estonia and Latvia and Lithuania. In Finland and Sweden, we are niche players. In Sweden, as Baiba said, we are renting mainly Manitou, and we are investing a lot in these big rotating Manitou, and we will continue to do this. But we have small team, profitable team. I would like to mention that if we are looking on 2023 results, we are profitable in all countries except Estonia. And this year we have budget and plans to be profitable in all our countries where we are operating. That's why we need additional equipment to get break-even point, especially in Estonia. And of course, for Finland, Sweden, we have less investments in new equipment. If we compare with the Baltic, because majority of our investments will go in new equipment will go to the Baltic countries, but in Finland, Sweden, we are actively working and we are looking to buy some companies. If it will be some small companies, probably we can make we can afford to do ourselves with liquidity which we will have after this bond issuing also. And if it will be some bigger company, most probably we will go with additional bond issue, or we are seriously thinking about possible IPO in nearest future, maybe next year. And this is how we see and how we want to develop our company. Of course, definitely we have ambitious plans, and we would like to have significant increase in Finland and Sweden, but not only through the investment in equipment, but mainly from the M&A. We are looking for some companies to buy in this region.
Okay, thank you, Andres. Another question is since you have already put some notes on 11% and some investors already know you, how the distribution sale of notes goes so far? I believe we cannot really answer this question, as the results for the subscription will be announced after the subscription period on the March 19th.
But I would like just to add that you still can invest. Most probably you will get some bonds.
Yes, and I want to remind that last tranche, which was in September, there was oversubscription. So we had the amount 4.5 million, and our subscription was 7. Total demand was for 7 million. So I would say we felt that some who didn't get notes was very keen to buy, and yes,
Yes, in the current terms and conditions, we have first come, first serve the distribution principle, meaning that in case of oversubscription, investors who have subscribed earlier will get allocation as on a first priority basis.
So but what I want to add, yes, you are still, as I said, can subscribe, and still there are some available bonds.
Yes. Another question is, how are you managing your equipment depreciation? At what point do you renew the fleet?
Yes, it's very interesting questions. It's in this rental business. There are different approaches. Actually, one of the rental company tried to rent very short period of time equipment, 2-3 years, and after that selling equipment and get more actually profit on a selling price. We actually prefer to rent equipment, let's say, up to the time when we understand that repairing and maintenance cost much higher than actually not than possible rental income. It's definitely we are selling this equipment, and of course, if this equipment staying very long time on repairing, and we need to spend a lot of time to fix this equipment, because for us it's very important to make very quickly repairing, maintenance, and actually bring back to the market our equipment, because actually we have two variables from which depends our sales. First one, it's a price. Second one is utilizations. If we have higher utilizations, we can offer lower price, or if the utilization is not high, we try to cover through the price, which is not I think in today's market situation not possible. That's why if we are equipment should stay a long time on our repairing depot, or cost of repairing and maintenance becomes significant, we are selling equipment. Usually, if we are talking about some excavator, lifts, big machines, it's something around 9 to 10 years, and usually we are selling this, not usually, but almost 99% cases, we are selling this equipment in big auctions, which happen in Europe, in Netherlands, usually in Ricci Brothers. We are delivering, and at that point of time, the prices for used equipment after, let's say, 10 years, it's very good. We are selling equipment more than 30% from initial acquisition value, usually between 30 to 40% from initial acquisition value of equipment. And of course, depreciation for big machines, for lifts, we have 10 years, for scaffolding we have 12 years, for small machines we have 5, even for some of them we have 3 years. And we have also for big machines which we are selling, we have some scrap value, which is not big. It depends on a group, but it could be between 10 to 20%. Actually, we are depreciate not 100% of equipment, but we are depreciate, let's say, 90 to 80% of initial acquisition value of equipment, because we have very good selling price. As I said, it's usually between 30 to 40%, and today it's really very good. Yes, and I think this is about equipment. Yes, about average age. It's good to have average age for rental company between, I think it's excellent if company has something between 4 to 5 years, it's excellent. It means half of the equipment should be, let's say, new, half of equipment should be more than 5-6 years. In average, you can get something between 4-5 years. It's a average aging of equipment. If you have something like 3, it's almost new equipment you have on your stock.
Thank you, Andres. Another question is about the industry as such. Do you feel the construction sector shrinking due to raising interest rates, or is the interest rate for construction sector in tolerance range, as it influences your equipment renting business?
You know, it's first of all, I think the construction market will grow anyway, and we have maybe different structure of this construction market. We will have a lot of income from Rail Baltic. We will have a lot of income from some military projects. We are actually one of the partners of USA Army from 2010, I think, in Latvia, and we are serving them and providing equipment. And Yes, this is market, from my understanding anyway. Construction market will grow. It depends, of course, the double digits which we have last year and probably this year in Latvia, Lithuania, it will be for some period of time, not always. Yes, but in Estonia, I think also the market will recover this year and probably it will be flat or with a small growth, from my understanding. And interest rates, I think it's like always we want to have also a less interest rate, but first time when we issue the bonds we had 8%, after we had 11, now we a little bit decreased to 10 because we expecting that in nearest future will decrease some, we will see some decrease of interest rate probably for 1-2%, from my understanding. That's why we also decreasing for 1% our offer interest rate for our bonds. But from my understanding, construction anyway will develop, and we need to build a lot of things, and we will, of course, rental company part of this story.
All right. Thank you, Andris. The next question is, what is the main purpose for this bond issue? I believe we have already answered this. Then can you describe in more detail the increase in share capital via payment in kind? What assets were contributed? Who evaluated the fair value of these assets? And based on preliminary balance sheet, I understand that no intangible assets were created in this process. Is it correct? So maybe perhaps Baiba can answer it, or others?
Yeah, Baiba could answer it.
So the increase of share capital was made through the investment of the Storent investment to Storent Holding. So we evaluated the Storent business itself, and through this reorganization, it was invested. So the part of business, 5 countries were invested in the Storent Holding. So it was not.
Yeah, I would like to probably add, to understand simply, we cannot sell operation in Russia. It was very difficult because we cannot change owners in Russia. And we decided between Storent Holding and operation countries, we had Storent Investment Company. And we decided one of the way how we can sell these operations, this is split this company in 2 parts. One part, it's the Russia operations, it's just 100,000 left. We had value, we evaluate Russian operation for 100,000 euros, not more. And the rest 5 countries we are putting in Storent Holding. And originally, Storent Investments, if you will look on a Storent Investment data, historical data, Storent Investments has equity 33 million. And actually, this is because we are, let's say, splitting Storent Investment and adding Storent Holding. This is was how we increased our equity, but we didn't have any let's say goodwills or something like this on our balance sheets in asset sides. Actually, yes, there is no any intangible assets made in this process. Okay. There is no intangible assets.
Another question: what comprises the equity growth in 2023? I guess it
Could you repeat, please?
Yes. What comprises the equity growth in 2023?
So actually, it was. I think it's similar to the previous question. So maybe it's a question why we did it. Of course, it's important also for us to show the balance sheet numbers for the bondholders to reflect like real business situation, and that was also part of this asset revaluation and also equity increase to reflect the business numbers in the balance sheet, because as we know, there's different methods of what you can use, and we realized that actually during years what we have used during year, it doesn't work anymore for us. So that's why we also changed the asset revaluation method and also increase equity through these investments.
Actually, I would like to add to Bible and explain maybe more simple words. We look on our balance sheets and recognize one thing. We always saying that we have assets which actually value of these assets much higher. Not like we had on our balance sheet using just acquisition method of valuation of our assets. We understood that if we have really higher, we need to do this. And actually, what actually about audited reports of any auditors about real value, does reports show real picture of the company? And we understood that these assets does not showing anything. And we asking third party just to make valuation of our assets because we understood they are costing much more. But just when we are saying to you and showing in some presentation, okay, residual value, I don't know, 1x, yes, but real value 2x or 3x, it doesn't matter because it's our opinion. And that's why we took third party to make this valuation and to understand real picture of our assets. Actually, what is it significantly affect in general value of a company. And of course, we are implementing some scrap value for depreciation because we also looking on our profit and loss statements and understood that it's not also corresponding with real situations. And actually today, balance sheet, profit and loss statements, they really show the situation in a company. They really show the asset value. They really show our profitability. And this is, I think, very important to make any decision, especially also for investors, for you.
Thank you. Another question, are there any other competitors focusing on digitalization of services, and how do you plan to stay ahead?
Digitalization of services, mainly main competitors not here, main competitors in United States. Only the company is focusing on this, who is trying to implement new things. This is, of course, the biggest United Rental and some other rental, smaller rental company in United States like Big Rents, who is doing a little bit differently and the rental business and using different approach to rent equipment. But if you are looking on the Baltic markets, the biggest competitors like Loxam, Ramirent belongs to Loxam, Cramo belongs to Boyles. I would say this is the old-fashioned companies. They are doing something, but they sales, online sales, a couple of percentage actually. And in a lot of things they try to copy us, but it's not like, you know, you cannot copy something if you really do not believe in this. Yes, if you are just to try to make some copy and thinking, okay, this is probably we need to have, but in real life, I don't believe that this is working. That's why I think in terms of digitalization, our competitors, biggest competitors, do nothing or almost nothing. But smallest ones, they cannot afford this because it's really expensive. And we are investing in IT every year more than 1 million. It's a big amount of money. We are really from the day one investing a lot in digitalizations and in automatizations of our processes, because this is, let's say, I believe it's like my DNA. I think this is only way how we can do this business. And as I said, you should believe in what you are doing, and only when you believe in this, you will get some results.
Thank you. The next question, how are you planning to increase market share in the Nordics?
I mentioned already in Nordic, we are looking for M&A. We are looking to buy some companies. We are investing in equipment, but very smart and very limited amount. As I said, in Sweden, we investing in mainly in money to. In Finland, we investing in truck-mounted cranes. It's a absolutely different business. We are doing this only in Finland, and also earth moving and platforms, lifts and platforms. Oh, and earth moving, but access platforms and lifts. We are not renting earth moving in Finland. But in Finland, we are open outlets in different regions. Also, we are considering to open in one additional city, and also in Finland we have some small targets at the moment on the tables, which probably we could buy. This is not big companies. This is companies with like, I don't know, 2 to 4 million sales. It's not a big one.
Okay, thank you. And next question, how much are Storent services used in large upcoming public investment projects, like Rail Baltic, for example?
A lot of, we are renting a lot of, but we are renting not general constructors, we are renting construction companies who make themselves, they are doing, let's say, work themselves. They are not managing, they are doing something. Actually, we are renting equipment to construction companies which really build something. Mm-hmm. And of course, a lot of our investments which we are going to invest from these 20 millions connected to this project also.
Mm-hmm. Okay, thank you. And the last question, what is your average equipment utilization rate vis-a-vis competitors?
Utilization rates, I think, vis-a-vis competitors, it's very nice. Probably competitors asking some question. They are also here. Okay, but it's not big secret. Yes, we have in average in industry, if you have some 50% utilization in our region, where we have, let's say, winter, and for some product like scaffolding, earth moving, we really have some low season time. It's very good if in average you have 50 for all groups in a company. Of course, for some group we have 80% utilization, 90% utilization. But for some groups we have only 20 and 30% utilization, especially for small equipment. Usually for small equipment we have small utilizations, but price for this equipment higher and profitability higher. And that's why we also need some money to invest in small equipment, because we cannot actually get financing for small equipment from the banks. Banks can provide only for big machines financing, for, I don't know, some power tools, for vibro blades, I don't know, for any small tools. Aluminium towers, for example, you cannot get financing from the banks. And this is also one of the reasons why we need to issue some bonds and looking for another way how to finance our investments, actually. But in general, I think it depends on country, of course, but it depends on outlet. Our business, it's very local business, and we cannot compare. In general, I think the utilizations we have higher because we have less fleets than our biggest competitors, because they have deeper pocket and actually they are bringing much more equipment. Sometimes they really need. And it's also sometimes problems for pricing, but today we see that they start to be more careful also with the investments in the Baltic market, because we are bringing new equipment, and they are try to be ready for that also.
Thank you. With this, we end the questions and answers session. The webinar is over now, and the recording will be available on Nasdaq Baltic YouTube channel soon afterwards.
Yeah.
Thank you.
I would like to add also at the end, sorry, Yanis. I would like to say a couple of words at the end. I would like to say big thanks to everybody who already invested in our company. We have already 1,500 investors. And I believe this is the win-win situations because we are getting some money to develop our company. You are getting pretty high interest rate. Actually, we are sharing our profit with you. And I think it's a win-win situations. And of course, this is the way how we can develop our company in the future. And a lot of investors, as I said, 1,500, they are already part of our success. And I think some new investors which invest in these bonds will be the part of our success of our company, development of our company. Thank you very much, everybody.
Thank you.